Hello, what's up, guys? So, my name is Haya Fayaz, and today I'm very excited because AAA paper has come out, the mock paper has come out, and best chance to practice, best chance to get to know what kind of paper is going to come up in the June attempt. And I'm very excited to not just help you to get the answer. See, getting a solution is easy because IFRS standard, you can link it with a scenario, you can understand the risk of material misstatement, the business risk, and all that. That is okay because now that you have done, assuming that you have done the kit practice, you might know about what I'm talking about. But you know how to manage time and how to at the same time think that way, think in the exam perspective, like just be able to solve the answer in no time. And what are the tactics for that? What are the tricks for that? So we all talk about the solutions. All the teachers will sit for 2 hours, solve the solution and all that. That's okay, fine, well and good. That's really helpful. But what about thinking that way? What about thinking and what about the tricks, the tips? I'm going to cover that. So I'm going to keep it as short as possible. And let's get started. I'm very, very, very excited, guys. And sorry about the quality, guys, but I'm pretty sure once I share my screen, it won't be that bad because screen quality. Yeah. So let's get started. I am here in the practice exams in the ACCA practice platform session, and here I'm going to assign this, and we are going to read through the question. Okay. So I'm just going to start and figure out the question. Okay. Okay. Mm, next. Okay. Next. Next. Yes. Okay. So, guys, let's get started. Let's just firstly understand what is this. Okay, what is this? What are we discussing here? Mm. You're the manager, the auditor of Tahoma, firm of are responsible for the audit of Calibri for the year ending 30 September. So, make a note of the year end. Very important, guys. I'm not going to repeat this again and again. You should know it actually. Year end is important so that you can figure out how much time would be there for anything, any major event happening, or maybe any reconstruction. That reconstructing provision and all is there, na? So what if how much time is left for that, or something, or for any contracts out there if they are breached, or anything you have received from the partner. Okay, which you receive from Gil's as audit engagement partner. First of all, even make a note of these names because you're going to use it in the email format. Okay, from, to, date, subject, all of that. Then company information, background information about the Calibri's current structure and business activities. And okay, that means this is about that. Then you can figure out which is consisting of what, so that when you have to navigate to that, when you have to go to that pane, you're not shocked or you're not confused where it is, how I should find, or because when you're writing the answer, you're in that process, you end up forgetting where I can get the information from. So no need to panic. You can directly get it from the respective exhibit. You can refer to this page back and see which has what information, or you can just click one by one and see has what information. No big deal, it won't waste your time. In fact, it will lead you to the correct information and good quality information, so you won't end up making mistakes. Now, meeting notes, summary events during the year as discussed in a meeting between Gill and finance director. Okay. Maybe whatever events have taken place from which you will identify the risks, material misstatements, all of that. The interim inventory count extract, point of concern raising. Okay, there are some concerns, so you should be very well aware that okay, I can get some inventory related audit risks or procedures to be asked, or something will be there related to inventory. So, your brain will start planning that thing, or in the background, it will start, running all those audit procedures which you have practiced throughout your practice time. Then sustainability reporting also, details of requests by the directors of Calibri to assist with sustainability matters. Yeah. So maybe there is some sustainability reporting service or something. Maybe we are asked to provide some non-assurance service. I can like assume that. I don't know what the question says. So let's just start, or let's just start with the requirements first, because until we don't understand what it is, we'll just, become very lost. So it is better if we understand the requirements first. So where is it? Respond to the instructions in the email. The split of of the mark allocation is shown in Exhibit 1, partner's email. Professional marks will be based on communication, analysis, evaluation, all of this basically. So 10 easy marks just for professional marks. So you can easily gain using your writing skill, using the way you communicate your words, using your analysis. You know what ratios you use, and what you identified the anomalies, and how are you linking the anomalies to the scenario. These are all interlinked, these professional skills. Communication plus analysis, all of these become interlinked. So it is very nice, guys. Actually, it is genuinely, I feel you can easily gain 10 marks. So partner's email, I believe, has all the requirements, right? And yeah, it has this A, B, C. So we are navigated to that. So let's understand. You need to start planning the audit of Calibri for the year ended. As the year ended 30 September XY, and help me with this. I have provided you with some relevant. I met with the finance director yesterday to discuss a number of matters, including some recent business developments in line with the internal quality procedures of Tahoma Associates. I have determined that profit before tax should be the basis for the calculation of materiality. Using the information provided, I require you to prepare briefing notes for my own use, in which you are using all the exhibits, evaluate the significant business risks to be considered in planning the Calibri. Okay, using all the exhibits, first part you will do, and this is 10 marks. So 10 marks means 5 points, 5 reasonable points with, 2 sentences each. Don't sit for writing 10 points there. Then 2 and 3 exhibit to be used for point B. Evaluate and prioritize significant risk of material misstatement to be considered in developing the audit strategy. Using PBT as your benchmark, you'll need to determine, okay. So, of course, when you write the material misstatement question, you already know that you start with materiality paragraph, in which you end up further writing down what, based on PBT, your materiality level would be in this to this range. Then you have to choose a specific materiality, whether you will go for the lower end or the higher end. So if it is very highly risky company, they are likely to be listed or something, then of course material misstatement is quite high. So you will definitely go for the lower end of the materiality, because the lower the materiality, the lower the range, the more likely it is for you to identify the risky items, or for you to test more items actually. Because see, you use an example. Your materiality is in 5 to 10 range, okay? Let's say the company is highly risky. It's highly likely that every other item out there has risk of material misstatement. So what you will do is you will set it to 5, the materiality. That means below 5, whatever will be there, sorry, above 5, whatever will be there will be a material misstatement, a material item to be tested. It is material for, if there is any misstatement above this 5, it is very material. So this means that, and however, if it would have been above 10, that means you're missing out a lot of items below 10, right? You're not going to test the item below 10, you will test the item above 10. So if it is a very highly risky, financials, very highly risky company, or they are likely to get listed, and it's very important to do stringent audit, you will try to reduce the materiality to 5, such that more and more items are covered. More, greater than 5, whatever items will be there, all of them will be covered. So you're not missing out. Okay, guys? Sorry, guys, had to like go away somewhere. Uh, and this is the second day of shooting. So let's finish this question of today, and let me show you how you can score 50 marks very easily. Okay. So here is the partner's email where we were discussing about risk of material misstatement. Okay. And let's see, it's loading, guys. And I'm going to solve it in Word because so that I can use my marker and then show you, if I want to make some drawings or something like that, right? Yeah, so I'm going to use Word, guys, so that I can, show you some drawings and all if I'm making and stuff like that. So let's get started. Uh, yeah. Okay. So yeah, we were there in the risk of material misstatement part. Now exhibit four, no, first is exhibit two and three you evaluate and prioritize. So you will put heading two B like that. Then you're not required to consider risk of material misstatement arising with respect to inventory held by Calibri. Okay, maybe some inventory is held by Calibri. We are talking about Calibri only, right? Yeah. Tahoma is the audit associate's name. Yeah. So fine. So we don't have to cover the inventory part. Okay. Maybe inventory part is covered here. That's why they're saying don't consider it here. So justify why inventories or parts and have been identified as significant risk of. That's why it is said that you don't have to consider that. See, then design the principal audit procedures to be performed with the valuation of the used car. You use only exhibit for the same. Then discuss the ethical and professional issues arising from directors' request for Tahoma to provide the systems and KPIs for the sustainability reporting, including providing the sustainability assurance and uh, determine which of these services, if any, could be provided by Tahoma. So first, ethical issues, the threats, ethical threats, we know that there's issue. Maybe they are providing of course, self review threat and all of this is there. So plus maybe if there's something else, we can do the reasoning properly. 8 marks means 4 marks, 4 marks for each, and determine four sentences for each. And determine which of these services, if any, could be provided by Tahoma. So, which services, if they are able to provide, also with what precautions they should provide, and all that, we can give some suggestions. However, we'll just suggest to avoid it at the same time as well. If it's possible, just avoid it, especially if the company is getting listed. So now we'll get to know further. Actually, let's what I would do to save time is like just do it together. So looking at this, like I want to solve it bit by bit. So all the exhibits I should consider business risk. Okay. So I will just I how many marks is it? How many marks is it? 10 marks. So I will consider like around 5 points, maybe. Yeah, I'll possibly consider 5 points because that's more than a 5 points, two sentences and all each, or some solid sentences, and you're good to go. You don't have to write 10 points, guys. Please make a note of that, guys. Okay. Then I will start. Actually, I need a format at the same time. I need a specific format also, na? Okay, I'm going to solve it in Word as I already said it. Okay. And this is question one. So please make a note that you have to mention the question also. Some people don't do that. They're like, our examiner will understand. But it's not about examiner understanding. It sounds like, you can't just randomly start up. Na? You should write, this is the question that I'm attempting. Because there are other questions also in the paper, right? So be careful about that. So, of course, it's briefing notes. Okay, the format is briefing notes. And I'm just going to bolden it up a bit. And then to whom are we writing to? Who is a person to whom we are writing? I think to the manager, right? What was his name? See, my screen is a bit small, but your screen will be big in the exam if you have a good center and all. Your screen will be quite big, so you can put all the exhibits on the screen, but don't clutter it so much so that you can't see anything. So, Gil Sands is the one. Okay. So, Gil Sands is the partner, the manager, audit engagement partner. Okay. And this does not have to be bold, so please make a note of that. Actually, why not use partner's email itself? We just have to use it as it is, right? Just that I have to reverse to and from, like, yeah. Order engagement partner, subject. Since it's a reply, I'll write reply subject order planning because that's how emails are, if you have noticed. So, to order engagement partner from, no, it is from me, the audit manager. Gil Sands audit engagement partner. No, bold it. Please don't bold it. Calibri Co. And date is 1 July X5. Tahoma is a name, so I'll write Tahoma, right? No, to be more specific. Associates, okay? And don't worry, guys. I won't like, I'll tell you how to write the answer, okay? I'm not going to write and waste your time and write the whole answer, okay? I'm also helping you to I'll give you the points, but you have to decide it on your own. I'll just give you the sentences for one or two, complete and give you, because otherwise it will take hours and nobody's sitting here for hours now, right? But yeah, what you can do is as I give the points, you can start solving and writing down them as sentences on your own. That would be helpful. And then afterwards, practice it again on your own, like from scratch. That's my idea. That's the best way of learning. You're learning with me at the same time and not getting bored also, right? And you're solving the mock also alongside. So date is 1 July and introduction has to be there. Please take a note. Uh, but see, I'm using these shortcuts. In exam, maybe bold and you can work, but other shortcuts won't work. So please take a note of that also. Please learn. That's why I'm saying practice using word processor. I'm practicing using word because I want to use my marker. Okay. But you practice using word processor. That is there in the practice platform, please. So, first of all, what are the briefing notes going to cover? So, based on our requirements, company information requirements and all, we will cover the briefing notes, for what year end, for which company be very, um, as you can see, first is about risk of material mistake. Then is about the audit procedures and why inventory is going to be a very this important risk, significant risk of material misstatement, and finally about sustainability reporting procedures. So you will jot that down in the introduction paragraph. Basically, what are you going to do as per the requirement? So don't read the don't exhibit and think, okay, I have to do. Just start writing the point. Maybe afterwards, after doing all the exhibits and all the requirements, you can make some changes to the intro if you feel it's a bit too general, if it is not specific. But what I'm going to suggest you now is what you're supposed to write initially. Like fast dump the introduction so that when you see that you have written the introduction, you're starting, that time your brain is like, okay, now we are actually entering into the answer and we are like feeling more confident. It looks like a proper format, right? So check this out, okay? I'm not going to type and show you. Where is ready with you? Okay. These briefing notes are with context to the audit planning of Calibri for the year ended 30th September X5 and all that. You read the thing, but you identify what are the mistakes. Okay. Mistakes are not related to, what I've written. Mistakes are related to the professional manner of writing. So here we can see clearly this has to be here. Okay. We have this tendency of writing YR, so be careful about that. I purposefully made that mistake so that I can show you guys. Okay, already this time. See, when for the year ended 30 September is the mistake. And related to capabilities and alongside the analysis of significant risk of material misstatements so that we can develop an appropriate audit strategy addressing the risk. Key audit procedures are as well suggested for the are also okay. That is another mistake, guys. Are also suggested for the valuation of used car inventory. Lastly, besides this, ethical and professional issues. Besides this or besides these. Lastly, besides these, or maybe just don't mention besides these. That does not sound professional. Lastly, ethical and professional issues arising from directors' requests relating to substantial sustainability reporting and assurance, along with suggestions of what services the WOMA can provide while considering its constraints, is also included in these notes. The constraints here means within those, where they address the ethical threats as well, there is safeguards as well, and they are able to provide the services as well. Based on that, what they are able to, suggest. Okay, we're done with this. Okay, now let's get started with the business risk. Business risk involves all the exhibits, so I'll read one by one. Okay, and I'll solve all together. But at the same time, I will also make up the heading. And please don't write it capital. It is small only. Okay, A. Okay, never mind. It's making it capital. Never mind, never mind. But you make it small. Okay, try to make it small. So this is it. Um, Yeah, I'll write business risk alongside, okay? In fact, what I would say is I will even write the material misstatement alongside. Because why to waste time when I can see material misstatement also being there on the way? Let me see the partner's email so that I can see which exhibit is there. So exhibit 2 and 3 has material misstatement, okay? So I will write about material misstatement also all alongside, okay? And oh god, okay, never mind. Risks of material misstatement, right? And you can see that underlined, properly marked, what is what, and so on. DI2, everything. Now we'll get forward with business risks, okay? We'll, jot down points also for each of these respectively so that we can take save time. So, it's a family business which was incorporated 30 years ago. And, oh God, I have to reduce the size of this. Okay. And yeah, oh, a very important thing I forgot mention about marks, 10 marks, so that I can, accordingly plan, bro. Like, this is how much. Without that, how will I plan? Otherwise, I'll keep wasting time. So, this is 12 marks. 12 marks. This is 10 marks both. Okay, this I'll remove later because, of course, this is just for my planning. And this is also 10 marks both. Sorry, this is 12 marks. Wait. Yeah, this is 12 marks. My bad. No, no, 10 only. Today I'm so confused, guys. Anyways, this is 8. 8 marks. Okay. So this is it, guys. We have jotted down the things and now we'll get started. So car sales are made from showrooms as in the same as a manufacturer company as a manufacturer. So there are no foreign currency transactions. So well and good, we don't have any foreign exchange gains, losses, all of that thing, right? And a single manufacturer perpetua is there. Business comprises two divisions, car sales and what is the other division? Servicing. Okay. So car sales are made from showrooms as part of a dealership franchise package with Perpetua. Calibri is permitted to sell new Perpetua cars vehicles from the manufacturer in the specific territory under the franchise agreement. Okay, and that means it's a brand name of Perpetua, and they are allowed to do that. So the agreement requires single upfront fee of 800,000 for each showroom location. This gives Calibri the right to sell vehicles manufactured by Perpetua and make repairs to pre-used cars using manufacturer approved parts. And this fee is non-refundable and paid only once upon the opening of each new showroom. Okay. And franchise agreements last, the fee is non-refundable and paid only once. Okay. So for each showroom, it's one off. And wherever they have got the showrooms, they will, as soon as they open a new showroom, they'll pay that one off fee and they can use Perpetua cars and sell and all that. Right, and it's non-refundable, so in case if they cancel they won't get any refund in case, because we need to be sure about, we need to be aware of that scenario. So franchise agreements last 10 years and can be withdrawn without refund if conditions are not met. So there are some conditions, so these include requirements to update fixture and fittings as required by Perpetua to ensure a consistent brand image and to meet certain customer service and sales volume key performance indicators. Okay, brand image should be there, and uh, maybe there has to be there's specific standard, for selling and all that. So fixture and fittings are there, any repairs are there. Car should not be just left like that. It should be properly fixed, fit, everything should be checked on. And to meet certain customer service and sales volume key performance day. Providing these requirements are met, it is customary for franchise agreements to be renewed automatically after the initial 10-year period. Historically, Caribli has always had franchise agreements renewed, and such have determined it is appropriate to capitalize upfront fees and assume the assets have an indefinite life. So if that is the case, then we would have to like check for impairment every time. So you should, at the same time, you should try to recall all the related things related to an indefinite life asset. What are the things that you can, pop up in your mind that could potentially be tested in this scenario? Because why am I telling you this? Because it actually helps you when you plan the answer. When you plan and write the answer, your brain is like, I already know this, I already checked it with myself, I already guessed it that this would be the thing, so I can just jot it down and time saved. That's it, simple, guys. So nobody will ever complain that AAA paper is hard or AAA paper I don't know. So as soon as you read the sentences, you should recall the possible IFRS standards and the IFRS requirements, accounting treatments associated with it. This can actually help. Now, I don't mean to say that you have to keep thinking about it. I mean to say that you have to recall. Try recalling how much ever you can, alongside. So Perpetua owns the car showrooms, which is why you have to revise the IFRS standards properly. Now, Perpetua owns the car showrooms, which are then leased by Calibri for a fixed duration of 10 years. And if the franchise is withdrawn by the manufacturer, Calibri will pay a penalty fee to exit the property lease early. Okay. Uh, Franchise is withdrawn by the manufacturer, that is Perpetua. So if he goes out from the agreement, if they go out from the agreement, even the penalty fee is there for the leased property as well. Because what they're doing is leasing the property and they're also taking the franchise of the cars. So everything is Perpetua's. It's just that we are leasing the property, the showrooms, and we are, using their cars, using their brand image. That's all. So Calibri can part exchange the old car and receive an allowance against the cost of a new car at Calibri location. These part exchange are then serviced and sold as pre-used vehicles. Okay. So their old cars can be exchanged for customers can exchange their old cars. And of course, it has to be, I think, Perpetua brand only, or I don't know, and receive an allowance against the cost of a new car. That means uh, at Calibri locations. Okay. Um, these part exchange cars are then serviced and sold as pre-used vehicles. Okay. Matlab, like, of course, it will, like, they have a used vehicles division also, I think. Like, they might have that, and they will use that car sold by the customers as, for used cars division only. They have exchanged it for the cost of the old car, and remaining whatever cost is there for the new car, okay, that they will adjust, that they will charge from the customer, okay. So that becomes a purchase price and all that, okay. Then so operates a car service and repair facility at each. Repairs are carried out in a motor vehicle shop, and large amounts of car parts are held in inventory to enable repairs to be made in a timely manner. Customers have the choice to pay for manufacturer approved parts or opt for a cheaper generic vehicle parts. So they have this choice. Okay. So maybe these things can be used because see, they are held in inventory to enable repairs to be made in timely manner. So we are like placing it there so that we take it seriously and all that. Repairs are carried out in a motor vehicle workshop. Because all the information about the company, guys, there's nothing to, consider from here. Like you can consider parts from things from here to understand. This is for your understanding purpose so that you get a brief overview of the company. But to consider something about your errors, you would have to go for the other things. Material misstatements and risks and all. What are the what are the problems exactly? What are the problems created by Calibri, our client? Now it's the time to see that and to draft the answer accordingly. So new cars represent 70% of Calibri projected revenue for the year ending 30 September. At present, Perpetua do not have any range of electric cars. However, they are planning on releasing their first electric cars to market in 20X8. Okay. So new car sales are the more portion, I think. And used car is probably the remaining 30%. Okay. So you take a note of that. And electric cars are not there right now. So that is a potential business risk, guys. I mean, electric cars are not there. That clearly means they are not like ahead of the market and they lose a competitive advantage. And therefore, that's it. This is common sense. Electric cars are everywhere. That's why I tell you commercial acumen is an important skill. You should know about this. When you hear the word electric car itself and this thing, why should the company Calibri suffer because of Perpetua? Perpetua not selling those cars, right? Electric car everywhere. Governments are giving subsidies also to be able to use this electric car and all that, and the batteries related to that, charging that. So everyone's encouraging the use of electric cars. So clearly they are going to go ahead of the game in the future. So why is Perpetua not? It's not about Perpetua. He's just a manufacturer. Why is Calibri not having cars which are going to help them give a competitive advantage? So that's the first point that I will mention, guys. That is lack of Perpetua, lack of electric cars with lack of selling or market share in electric cars. segment. Let's just be more professional. Okay. This is the first point. I'm going to draft only 5 points, as I already told. So this is my very first point. I got my first business risk. Okay. I'm jotting down and I'm being very efficient and I'm, yeah, like, yeah. Loss of franchise of location forfeiture has provided Calibri with notification of the intention to withdraw franchise and one of the Calibri obtained the franchise right for the location on 1 October X2 and has failed to meet state law required by virtue, resulting in revocation of the agreement. The franchise fee of 800,000 is non-refundable. Okay. They fail to meet the sales target. So if you see the previous screen, the previous exhibit, they had to meet a sales target and they had to meet some performance conditions to maintain the reputation. Okay. You can go ahead and check that exhibit out. I remember that properly. So that means that they are there's a revocation, and as a result the franchise fee is also non-refundable, so there's a loss of 800,000 here, and in addition 350,000 penalty will be required to terminate the lease. So automatically they didn't meet the franchisee agreement this criteria. Now the lease is also gone and the cars are also gone. Okay. So and plus penalty fee is also there. So now the thing is that you should have in your mind as an auditor is that they have created a provision for all this or not, because pretty sure they have not. Then only a risk of material misstatement will come up. So they might have not. So we need to check that out. So we will mark these 2 points, like I got 2 points together. So that's a good thing, right? So cancellation of franchise agreement, franchise agreement, or let's just say revocation of franchise agreement. Let's just use the word that is mentioned in the scenario. Revocation of franchise agreement, that's another loss. And the penalty fee and all of that will come in the same paragraph, right? Okay. Then other assets held to the side include um, fixture and fittings used car parts. Okay. The finance side of Calibri has stated that these assets will be utilized at other sites. No adjustments have been made to the projected financial statements in respect of the loss of the franchise. Lol. So clearly this is a misstatement. I'm just simply going to write down um, the law. Yeah. So cancellation of franchise agreement and whatever losses are there, right? And associated losses. Okay. That's the first point that I end up getting. Okay, bro. Yeah. So that's my first point. Okay. And as I said before, also in my reels, also I've covered it. I will just put a reel today. If you please check it out, guys. In the reel I've covered that the standards related to, or the points related to accounting standards are going to fetch you the higher mark. Please remember that. And I'll show you the marking guide also now. I have the access to that. I'll show you the marking guide. There clearly the points related to the particular asset item or FS financial statement item is going to help you get the higher mark. So the more you write that down, the more easily you will finish your answer off and you will get more marks also. Okay. So after this, I'll show you. So this is this one. Has you another assets? Okay, potential future listing. So decided to obtain a stock exchange listing, and it's hoping for the initial offering of shares to be made during the 6 months to 30 September. With this in mind, the board of directors are keep to ensure the financial statements show a strong performance. They are in a pressure, guys. Clearly, they're going to manipulate. This anybody can say. Anybody who's read corporate governance or not read corporate governance also, it's possible. It's human nature. Whenever you want to show something good, you want to picture something very nicely, you want to impress somebody, you will do this thing. You will get desperate and you will start showing wrong things in the financial statements and manipulate the financial statements, right? So that can of course create a risk of material misstatement. So future listing and pressure on directors. Okay. So this point I would say won't fetch you high marks because this is not related to accounting standard. Okay. This is not going to fetch you higher marks. Like it will be 2 marks, let's say. If accounting standard point is 4 marks, this is 2 marks. So it depends. Right. So audit committee and internal audit in order to improve company controls prior to listing, Calibri recruited a newly qualified accountant with experience in external audit. And in April XY, the company aims to create an internal audit department and hopes that by 31 December XY that will have 2 full-time staff. And in addition, okay, they are going to create one. They have not created one. They are going to go for listing. Okay, listing is going to happen at next year, right? 30 September during the 6 months to 30 September. That means uh, when it will be March or something. So that time they are going for listing, okay? And year end has already arrived, and they are still not having an internal audit team. And they have hired someone who is a accountant with external audit experience. So competency issues, external audit and internal audit experience are not the same. We all know that. So there are a lot of issues with this. So let's just jot it down and hope they have. In Calabria has pointed to independent non-executive from the car industry and intends to have recruited a third by the 31 December extra so that they can create an audit committee that is independent. Guys, lack of internal audit, lack of proper internal audit team. Guys, whenever these things are there now, this internal audit team makes suggestions about controls, about everything that is, segregation of duties, all these important uh, you know, uh, or mathematical accuracy checks, doing audit data analytics, system checks, and all of that. Okay, so it's not like external audit. External audit is more like into financial statements and doing the background checks related to that. But this is overly comprehensive. It covers everything. So there's no room for theft or any fraudulent activity if you have an internal audit team. So the company is going for listing, and definitely it's going to be under the eyes of the stakeholders. It's going to be witnessed by them. Everyone's going to notice them. So when anything is under notice, when all the stakeholders have very much interest in you, or if you're going for a listing, of course you want to raise funding, but have that reputation, right? For that purpose, for raising the funding, you have to have that reputation in place so that you can raise the funding accordingly. That is also a part. So that's why listed companies are expected to, behave more properly, have corporate governance structures in place and stuff. And now there's lack of internal audit team, and it's a good large company only. And at the same time, we have got figures also, right? Yeah. So 120,000, 200,000, 80,000. Okay, like it's a good size company, and it should have had all of this already in place. So definitely there are room for material misstatements, and we'll have to cover that in detail. So we'll go ahead with it. No worries. Neither of an appointed date has any financial expense. See, this is another point. So we'll mention all of this in uh, same point. Lack of corporate governance. I'll do all of this in one point so that I can get more marks, altogether in one paragraph. You know, and if you want, you can keep it as a separate point. But the thing is, when they see one particular title, okay, and all of the paragraph, a solid paragraph covering all respective proper keywords and everything, and since they are all related, right? See, if you write about the non-executive director in other line, you're good to go. You can do that. But it will sound like, okay, there's just one small sentence. We can only give 1 mark for that. Okay, but if you merge that with the paragraph which is relevant, that is this paragraph which I'm going to write, that would make more sense, right? Presentation is also a matter of concern. Na? Simply writing down points, bullets, and all that doesn't work. It doesn't work like that, right? So this is about it. Okay, potential future listing we have covered. I think pretty much whatever point was given to us, and what else is there, guys? What else can we say? Yeah. So I feel there's one more point that got missed out, okay? New car sales. So it seems like 70% represents from new car sales. You might have seen in the past papers also that if you're very much dependent on one particular thing also, like 70%, it should have at least been 50-50 or 50-40 like that. But 70% entirely on new car sales. What if you don't get new cars? Already you see one of the showrooms got closed. Again, if you don't meet the sales targets, another showrooms will get closed. All the new cars are useless, right? All the new cars, whatever dependency on the new cars will become useless because your showrooms will get closed if you don't meet the sale targets. And what if it's not purchase worthy? What if the price is not affordable? So for that purpose, you would have to ensure you depend both on used cars also, new cars also. Plus, the company does not have electric cars also. You have to think all this, guys. You have to think like a consultant, properly analyze everything, feasibility studies, everything. They don't have electric cars also. So why would a new car, which is so pricey and which is not sustainable at the same time, be purchased over an electric car, which is probably more sustainable and also price worthy, like they are quite speedy. I have tried one of them actually. So this is the thing, guys. This is the thing. Consider all these aspects together, and I'm going to include that, of course, in the point of dependency on new cars. Okay, in the business risk. It's a business risk, right? It's simple. Then next point, interim account extract, interim inventory count extract. Okay, there is some issue related to this. Full inventory counts for 1 month year, and the year-end figure is obtained via full roll forward of transactions from the date of the inventory count to the year-end. Roll forward. Roll forward. Okay. Of course, there is no if and buts on this. Clearly, it means that you are going to lose lose on your inventory count, because the problem is, okay, the problem is that you're not accurately doing. 1 year in inventory count should have been there, right? We all know this. Come on, guys. From AA onwards, that paper onwards, we know that year inventory counts are supposed to be done. Even auditors come and check over that, whether year inventory counts are done or not. So why are we not considering that? I don't understand. And if we don't consider that, how will we record correct, accurate inventory in the year end? Again, I don't understand that. So there is significant risk of material misstatement. One reason being this roll forward. Now, I've got 1 point, so I'll just. So latest inventory count was okay. Parts are 580, 480, 1408. Okay. This is the inventory count. What is this? To the year end. Okay. So X5 it is like that, X4 it is like that. Till September we will, roll forward from this. From 31 March X5 to 30 September X5, we'll have to roll forward from this. Now, the latest inventory count was attached by the audit team, and systems for monitoring inventory and account procedures were assessed as adequate after control testing and spot counts were performed. Okay. However, the audit supervisor highlighted concerns. So there are some concerns after they made some checks. And mm, 1 minute. It is 1 July X5. Okay, it is like probably interim audit. Yeah, it is interim audit. I forgot. So it's interim audit, which means that before the year end, they are doing it. So before the year end, we are still before the year end, guys. Okay. Systems for monitoring inventory levels were assessed. Okay. It was noted during the count that inventory is marked with a colored sticker to show that it has been counted. The color of the sticker is changed each year to avoid confusion, of course. And it was noted during the count that some of these parts were marked with as many as 5 different color stickers. God, guys, seriously. So that means they were there since long. They were there since 5 prior years, and now they would have to be written off. Or what is the status? We have to inquire with the management. What is the status? Why are you still keeping them in the inventory? Why are you not writing them off? Or even if maybe they are not being able to sold, say being sold or whatever, then what is the provision amount recorded for that? What is the allowance recorded for that? Or is it even worthy of you know being recorded in the allowance? We'll have to do this testing. So where it will come in the audit procedures, right? So about 5 years inventory. Okay, just write this short point. Okay. Then afterwards, what else is there? So it is noted that it was noted that during the count that inventory was has increased significantly despite that being no increase in sale volumes of either new or used cars. Okay. Inventory significant increase. Another point why it is this inventory significant. And guys, we can also include this in inventory losses. Like there is alongside inventory, keeping the inventory, there's also cost related to it, right? Warehouse storage costs. Actually, warehouse storage costs. Yeah, like all of the storage costs associated to it and all. And also keeping it in the proper condition, that also matters. So all of this leads to inventory losses, guys. Then the valuation of used car inventory was not performed. See, you have to think all these aspects. You have to think how it would be correlated with other questions as well, right? So that will save your time. See, I got my 4 points which I wanted. Maybe I need one more point because it's 10 marks. So yeah, it was not noted during the count that inventory. One thing I forgot, I didn't mention about the listing and lack of audit committee and all, because if their performance is going low, which it seems like, there's a risk of that happening, you know. Plus this cancellation of franchise agreement, 800,000 and all, quite material amounts are there, clearly. I'm not saying it, I have already decided it is material. It could be immaterial depending on the size of the firm, but still, that actually creates losses. And if they really affect the profit a lot, that means that could have a bad impression on the investors. So that means that that can have an effect on the listing as well. So that's a loss to the company, right? So that also has to be one of the business risks. Then fourth one, no, not here. Sorry. Did not this held at one location did not appear to be in a sale. Yeah. See, one did not appear to be in a saleable condition due to damage while held at the car showroom. Damage is there. You have to do NRV testing. And why is a damaged inventory there in the inventory? Clearly, it needs writing off. Another reason why inventory valuation might not be correct, roll off is not a correct way of finding the inventory, right? So I don't understand why would anybody suggest a roll off if there are such significant risks to inventory. So damaged inventory. So how much was this? This was 10 marks. Like both means 10 marks total. So 5 here, 5 here. So I need one more point, is it? Um, I think I'm good to go. These points are fine only. Right? We have got enough points. I don't think if you write two, three sentences for each, you're good to go. Then for two audit procedure for valuation, I could have written for this also. But no worries. If you don't want to write it now, like I won't write it now because I feel that after I jot down more points, I read more exhibits, I can more properly design the audit procedures. If you can write it alongside, well and good. You are like an audit expert, you're good to go. But I want to do it later. It's okay, guys, because half of the answer we have already written now. Like we have already planned the thing in our mind. All we have to do is write now. Then next is interim sustainability reporting. So this is probably easy because it's just non-assurance service and what are the threats and what are the safeguards to be implemented. What you suggest, that's all. To include additional information in the year's annual report, which demonstrates the sustainability targets and achievements. Your firm has been approached by the directors of Gariby to determine appropriate sustainability key performance indicators in this area and also requires assistance from Tahoma uh, to establish systems to capture and measure the sustainability information. The directors require a separate assurance report on these KPIs, which they have asked the HOMA to provide. So they want an assurance report separate from the audit report, and they require assistance to establish systems also. Systems is quite risky, guys. You're literally telling them to establish all the systems for sustainability information. So these systems, they will suggest, they will tell what type of information to come up, and this information will eventually come up in the FS, in the financial statements, maybe in the notes, disclosure, and all, right? So that clearly means that you're just trying to create a self review threat on purpose. Like the internal audit team should not even allow for this, right? So, this is it, guys. This is it. Significant increase. So, let's get started. Let's just do this thing. Let's start writing down the points further. But I didn't get one more point. I want one more point here. Cancellation of franchise, lack of proper internal team. Uh, One more point I would say materiality. Materiality will come first, actually. Don't forget that, please. 7, 8, 9, 10. I need one more point, I would say. Not good. Materiality should come the first. It has 2 marks. Is it fine? Is it enough for this? 3, 7, 8, 9, 10, 11, 12. Around 12 marks I will get if I write proper points. So I don't need a fourth point. Maybe I'm just overthinking. See, guys, we should not overthink in exams. So let's get started. Let's write the points. So I'm not going to write all the points. Come on, guys. It's an easy case study. I decoded this for you. And if you have practiced all the past papers and you know what exactly is supposed to be done in non-assurance, assurance, and all that, it's easy paper, guys. There's nothing to overthink about this. It's just the writing style that I'll show you now. Okay. So I will answer which part, which is most hard. What do you think, guys? Uh, let's just try with the listing and lack of audit committee and all. Okay, I want to mention this like that. Okay, and I'll write it down. I'm not going to waste your time with typing, my typing. I have already explained you this point. There's a lack of audit committee. Audit committee is important, especially if you have got to hire external audit team. You have got to make suggestions for the internal audit team, or internal audit team needs an independent party where it can report all the deficiencies to. So audit committee is a very important factor for that. And plus, you're getting listed. Audit committee has to be there, guys. Like seriously, maybe remuneration, nomination. Maybe if they are not there, actually they should be there, but if they're not there also, maybe it is okay to some extent. But if audit committee is not there, then it is not okay. It's important, if especially if you're a big team and you're getting external audited and all that, and you have internal audit team as well. So let's get started. So first I'll talk about this thing. See this, I wrote the point. Okay. So Calibri is planning to get listed and therefore needs to have an appropriate governance structure. It lacks the same, which is clearly evident via the lack of an audit committee and an internal audit department. This creates a risk of losses in the form of penalties if it is not fulfilling the requirements as per the regulations. Because there are lots of scrutiny, lots of regulations associated to getting listed and all that, and you're always like in the eyes of the stakeholders, everyone's noticing you, and it's not just about the investors; it's about people who are also who are interested in the stock market performance and want to know more about the company. And of course, once it gets listed, it gets more popular, right? For sure. So if they are probably interested in the way you are sustainable, or what are you doing for that, or they are interested in your industry, so it is not necessary that investors are only the people who are of concern. Any which ways, it won't attract good investment if you are having such reputation, where you're losing franchise agreements, you're not gaining sales targets on time and all that. So clearly there's a business risk associated with this. You see, guys, is planning to, I have mentioned which year and they are planning to get it. There's a risk of losses. So I'm explaining the risk. I'm getting the points from the scenario as per my plan. Okay. And I'm writing it down and explaining it. I didn't even have to refer to the exhibit, because what I did alongside the reading of the exhibit, I mentioned which part of the question, like the respective point, should come. See, simple. So this is what I expect you to do. This is how you will save time. Now see how easily I was able to jot the points. So whenever you read a particular exhibit, now this is not going to create a big difference, this is not going to make you lose marks, but it's good to have a proper English. Alongside this, the point related to them having faced loss of a significant, all of this I mentioned two losses here. One is the fact that the structure, audit committee governance structure is not there. Another, I mentioned something related to loss of franchise agreement and how it can affect the reputation of the company. So I mentioned, I tried to support the point of lack of a proper business image for listing. That is also one proper business, that's also a risk, business risk, and plus the compliance costs and all that. So I'm not going to mention this point, of course. This was just for this. So listing, uh, future listing. I'll mention the point name as future listing. Okay. I'll mention about one more point now. Lack of market share in electric car segment. Okay. This also is easier. Revocation of franchise. Okay. Let's just cover this one. Okay. Because this is an important point. That franchise agreement point is very important in terms of the amount as well. So let's see how we'll cover that as a business risk. To early lease termination due to the lack of meeting sales targets set by Perpetua because of the dependence on one manufacturer. So I'm not only covering the revocation point, but I'm also covering about the dependence alone. Clearly, Calibri will be at a loss because of not being able to meet the conditions of the franchise upon certain economic conditions like recession, which is not under the control of Calibri. So sometimes recession is there, they're not, customers are not able to afford, right? And there's no much movement in the market and all that. So as a result, they will be uh, not able to meet the sales targets, right? And that will create revocation of franchise agreements. So there should be some flexibility, I think. But again, that is not the point here. The point is that this is creating a business risk. So the risk is spread to other showrooms as well, or can spread to other showrooms as well, and thus can lead to further penalties and further losses. So this is another explanation. Similarly, you can write for inventory losses also, what we just saw. about the saleability condition and the problem related to inventory. More problems were there. The fact that there's obsolete inventory lying in the inventory, and there's also dependency on new car segment. Also, that is easy actually. You can just say 70% is there, 30% is there. Um, and can we just look at the inventory figures? I want to analyze them further. Okay, so it's not like it's a human brain. We can't remember everything together, so we can check it out again. So parts, and this is their parts. Used car segment is more, right? Yeah, you can see that, like, even if we can't rely on these figures, we can see that they clearly represent a huge portion of it, and they are keeping on increasing. So if they're increasing, it kind of shows that, and plus inventory had increased significantly despite that there being no increase in sales volume. So we can say that if you want to show numeric figures also, you can refer to this and mention about that. um IT divided by, I want to know what is the proportion of inventory it represents. So 1408 into 129, is it 30% used cars? I mean, you can mention how much proportion of inventory it is. Like, this is smaller to this compared to this, right? So clearly, and plus, it's also mentioned that used cars are increasing significantly, and no proportionate increase in sales volume is there. So that's another thing that can cause a business risk. Losses are being caused. Cash flows effect will also be there because there's inventory, there's storage costs also. You're maintaining the inventory at the same time, and you also have to uh, take care of this. Uh, Whether sales are there enough or not. Plus, you're losing on franchise agreements also if you don't meet the sales target. So all these losses are correlated, and you can mention that point in the inventory losses section, right? There's so much to it. There's so much you can write for it. Actually, it's very easy if you're like, if you correlate all the points and you are able to make up a paragraph. So hear me out, guys. It's genuinely very easy. Now, risk of material misstatement side by side, we'll also enhance that. Okay. So again, same like for above, I'm not going to enhance all the points. I'm first going to mention the materiality, of course, and then I'll mention about which one is very hard. Let's just say I'll mention about this point. Okay, about cancellation of franchise, because this point is going to give you more points, more marks over others, and more points will also be there because it's a franchise agreement. There are losses, there is provision to be made, there is write-offs and all of that, and we can write a lot on that. So let me show you guys. Now I jot down the points and let's get started. So first, materiality. Materiality is based on profit before tax. If you see the audit, the email notification, in that clearly it is mentioned what the materiality level. See, can I see this one? Yeah, here he has said that I have determined profit before tax should be the basis on which materiality should be calculated. So I'm going to use that. Okay. Cross this, cross this. So I use the PBT figures and I found 5 to 10% because we know it is 1 to 2 for assets, 0.5 to 1 for revenue, and 5 to 10 for profit before tax. So we did that and we got these figures. You can simply multiply the PBT projected for 20x5 and do accordingly. It is written here. I mean, if you are not able to navigate through it, I'll help you out. Where is this? Is it here? Yeah, here it is. 19. I just multiplied this into 5% and 10% of this. That's all to get the ranges. Then afterwards, what is mentioned? We must exercise professional judgment to determine the materiality level, and based on the fact that it's getting listed and it is highly risky, that there's a high risk of manipulation of accounts to be able to report a good performance. There is higher audit risk, and therefore we'll choose a lower materiality threshold. You should write properly like this, short, crisp paragraph. Why are we choosing that as a materiality level? And then go ahead with that. Usually, if actually usually the question does mention, but if it is not mentioning, then you should be able to identify which area has a risk, right? If it's revenue area or if it's PBT. If I suppose if the question did not provide me the materiality threshold basis, I would have simply taken revenue, to be honest, because revenue is more likely to have a risk here. Even PBT can be taken, but revenue is also risky equally. So that is also one point of concern. So, cancellation of actually revenue and maybe other costs. Maybe PBT would also be a good one because PBT includes both costs as well. And impairment is lack. We have not included impairment of the franchise assets. So, that also creates a significant risk on the profit before tax, right? Because we can't rely on that figure. Any which ways, it is uh, we could have chosen revenue or profit before tax. Now, cancellation of franchise. I have just written one point in this, the main point which can help you get a lot of marks. And why I'm telling this, I'll explain you also using the marking scheme. Since Calibri is accounted for franchise agreements as intangible assets with indefinite life, it is mandatory for it to be reviewed for impairment every year, especially. So basically, what I'm trying to say is that why specifically I'm specifically mentioning the risk, why there is a risk of material misstatement because of this error, because of the fact that franchise agreements is now to be revoked and it's an impairment indicator. So indefinite life, anyways, the by the year end you are supposed to check if there is impairment indicators. Okay, you have to review regardless of that being there or not. And here too, there is for sure because franchise is to be revoked. So definitely you have to impair this asset. Secondly, penalty also provision has to be recorded. Now you don't have to mention IFRS standards. You don't get marks for that. There is no adjustment made yet, and that's again going to what effect is it going to have on the financial statements, and what is the amount. If amounts are mentioned, well and good, you can say that this is the amount and it's exceeding the materiality. If it is not mentioned also, it's fine. For example, for future listing and all, I can't say what are the amounts, right? I can say that there's a pressure on the directors to manipulate the accounts, and therefore they will try to overstate the profit and overstate the revenue and all that. So that risk is there, but I can't mention the amounts. So but the thing is, since the loss is created during the year, and the impairment loss specifically for the franchise agreement could be quite high, because see, you can see the amount is like, how much was the amount? It was quite high, na, 900,000 or something. So that penalty amount was quite high. I'm not going back to that exhibit. That penalty amount was quite high, and it is kind of around the materiality level also, if we see. So if we don't include an impairment for that, that means that you're overstating your profits. And maybe directors are purposefully not including that, right? Because so that they can show good performance to the investors. So therefore, you have to be careful about that. And you can mention all these points, what I said, combination of all these points. And only materiality and this point is enough. See how much it took for me to complete this point, this big paragraph. I'm properly trying to consolidate whatever reasoning I gave, whatever reasoning is there for material misstatement, for franchise agreement cancellation to be a material misstatement, risk of material misstatement. So you have to write a similar point. That's all, guys. That's all it involves. Sometimes we just fail, we know everything, but we fail to write in the proper manner. So I'm teaching you that. Now, inventory is significant risk of material misstatement. So this is the other one, CI, where it is talking about the risk of misstatement. So you can mention there's 5 years inventory. Why did I write? This should be removed, and you should not write in numbers. Okay, this number should not be there. So inventory count roll forward. Of course, inventory adjustments you might not make them accurately, given the fact that there are lots of obsolete inventory also. Used cars are so much. There's damage inventory also. Valuation is definitely not going to be right, and maybe we would have to obsolete. We have to write them off. So if you are going to use roll forward of transactions, how will you write these off? How will you consider these adjustments which are so significant in nature, right? Plus, used cars are also getting so much in number. We saw in the question. If used cars are getting so much in number, that means again some allowance and some write off is required. Maybe some used cars have to be thrown off. We don't know. And all of this adjustments, how will we make if we just arrive using roll forward of transactions? So that is the point. Some of the inventory includes parts which are 5 years old, signified by the 5 years consecutive color. Yeah. Thus, I clearly mention what is mentioned in the scenario so that it does not sound like I'm mentioning my own point. And then why is 5 stickers a problem? 5 years old. That's why. And thus indicating a fall in NPV below cost and a risk of inaccuracy. I'm being more specific. It is going to lead to NRV being below cost. It shows that you know the IAS2 inventory standard, okay, lower of cost and NRV. So therefore, it is indicating that NRV will fall below cost. That is, the market price will fall below cost. What is the market price? The selling price that they offer, right? So the selling price which they will offer for an obsolete inventory or for an inventory item which is quite old, which is not in demand anymore, they will offer a discounted price, right? So therefore, NRV will fall below cost for sure. I mean, highly likely. So you should do the testing, right? How will you do if you value based on without an inventory count and based on some adjustments made here and there? Now, audit procedures for valuation of inventory. Rest of the points which I mentioned, please, you can like jot it down on your own. It's pretty much easy, right? I explained you everything now. It's just writing in the proper English, guys. Simple English, professional English, proper English. Now, review subsequent bank statements to verify the sale of used cars and if the NRV has exceeded the cost or not. If not, confirm the inventory has been written down to NRV. This is one point I wrote. You should write three more points because I already wrote 2 points. So I'll explain to compare market information later. Yeah, what I'm trying to say is you are using subsequent bank statements to know how much exactly have you sold the inventory for, especially related to used cars, because used cars are very high in number. So a lot of them might have to be sold at a discount, right? So NRV might have gone below the cost. We don't know. So we are checking that using the subsequent bank statements and confirming if the year-end inventory is valued properly for such used cars. So therefore, if not, confirm that inventory has been written down to NRV. Right. Then compare market information data to NPVs tested by the management and confirm. Yeah. So any NRV testing, we can't directly rely on management information. You can, for a sample of used cars for which NRV testing has been done, you can go and compare with the market related NRV testing and see if it is accurately done or if NRV is, maybe management is trying to keep the NRV higher than the cost such that they don't have to write down the value, right? So we don't, so that they can show a high inventory, overstated inventory. So to ensure that this does not take place, we can, for a sample, check if the NRV is actually reasonably tested. We can see some market data basically. Then you can even mention about one thing. There was one point related to exchange of vehicles and giving allowances to customer. Right now, how will I go there? 1 minute. Thing is, my screen is a bit small. That's why it is happening like that. See, guys, I can't even cross it now. Hopefully, I cannot in this exhibit though. See, one is this one, meeting notes. 1 minute. No, not this. I saw some point here or here. How? No, maybe company overview. Yeah. So, can get part exchange their old car and receive an allowance against a car. Means, of course, old car will come in the inventory now, and now that value will be the value of how much it has fulfilled the new car. So basically, my point is for such trade in things or for such part exchange cars, you can review sample of documents and see how the valuation has been made and whether it is accurately made or not, right? Whether it is accurate according to whether it's reasonable or not. Or rather, just don't include this point. Make it like these part exchange cars are then service. Maybe for these part exchange cars, you can review the servicing costs, the invoices related to that, and whether they have been included in the valuation of the cars, the part exchange cars, because that should be because you're bringing cars in a saleable condition. So you should ensure that these pre-used vehicles are including the service costs, also the valuation of inventory has been done. In short, you can do that. Another point, there's so many points out there. This one, I saw one point where they were not in a saleable condition, held at one location, did not appear to be in a saleable. So what have you done? Have you brought them in a saleable condition? If any repair costs are there for that, then you have to include that also in the cost of inventory. We know that for any asset, if you're bringing them, you're trying to improve the economic benefits coming out from the asset. Any cost incurred for that purpose, for renovation purpose, for bringing them into a saleable condition, that will definitely be included as part of the cost, and we will include that in the inventory valuation. So for a sample of such cars, damaged cars, you can do the testing of such kind, right? Or for a sample of used cars, you can do the testing. Like that, you can mention. See, I gave you so many points, guys. Now, next is what? Next, ethical and professional issues. This is easy. This is just I didn't mention in detail because it was very easy, guys. See, we have learned about stuff like related to where there are conflicts of interest. There are two competitors that the audit firm is auditing, and the audit firm has to keep separate teams and all that. Similar situation here, it's just one audit team trying to one audit firm. Uh, the what was the name? Tahoma. See, by the end of the question, I forgot the name itself. So Tahoma is trying to they are asking Tahoma to provide sustainability reporting assurance also and audit report for financial statements also. So of course self-review threat is created. Plus management the system controls around this. The system controls what we say. The director requires separate no to establish the systems to capture and measure the sustainability. So the systems will define the basis on which sustainability will be calculated. That amount, sustainability amount, will be included in the notes to accounts, and that eventually Tahoma will audit. So much of risk of threat is created, no self review threat is created. So all this you jot down in points, explain in points, and finish it off. Very simple, guys. That is there. Then, of course, they are getting listed. Don't forget that. So listing constraints are there. They can't provide assurance services like that. Um, like they will be in, if yeah they are not allowed to. This is how the corporate governance works. They are not allowed to, according to listing compliance requirements also, they're not allowed to provide non-assurance services like that, especially which they are going to audit in the future, because you have to be independent, right? You're an audit firm, you have to be independent as possible, otherwise you're not fit for the audit. You're not fit to audit the company if you have lots of threats out there which is beyond the acceptable level. Then competence checks also has to be made. It's not necessary that audit firm can provide sustainability rated assurance, right? It's not important. And finally, they have to ensure that management responsibility. See, as I said, self-review threat is there. Plus, they can give suggestions maybe, but all of the responsibilities of management to make the final decision and to take the responsibility that okay, we are responsible for implementing it, and we are not going to blame the auditors tomorrow if anything goes wrong, if our estimates are wrong, if the basis on which we calculated the sustainability information is wrong or something. So they are just going to give suggestions. So what I suggested here is that they can have separate teams in place. First, they should review whether the threat is can be reduced to an acceptable level, or whether they can accept the threat or not. Because in audit sometimes there are other threats also, sometimes peace-related threats also, or some other threats are also there. Okay, we can't ignore them always. So we can ensure that it is to an acceptable level. Okay, and we provide this service maybe until before the listing. Okay, after that we should avoid, because once it gets fully listed we can't provide such services. So till then we can. There is still next year, like next year March 20x6 March. So we can review the competence of our teams, have separate teams in place. They're physically separated and they don't have any association with each other, and they're totally independent of each other. They're separate rooms and all that. You can mention all these safeguards which we mentioned for conflict of interest, and then they can advise for controls around the system, and but not take responsibility. That's final responsibility is on the management. What I explained, I just wrote it down here in the form of safeguards. So that's it, guys. And of course this is 8 marks, so 4 each, and you're good to go. Okay, so it's a very easy paper, guys. If you are good with your IFRS knowledge, AA knowledge, AAA knowledge, you can review the study text again. Actually, now it is too late because it's June now. But I would say go for exam kit, prepare that properly, go through all the questions, look at the way they write. And I should also show you the marking scheme, right? So yeah, this is the marking scheme. See, we clearly see 2 marks for each significant risk identified. So first one was 10 marks, right? It is mentioned here. 10 marks, 2 marks for whatever you identified. So we got obsolete. I chose this one. Loss of franchise rights. I chose that. Listing also I chose. Uh, Potential listing, corporate governance are linked, to be honest, and reliance on new car sales. So we are only relying on one. To be honest, these are all correlated to each other. You can even merge them and write down 5 points and finish it off. But okay. Then at the same time, evaluation and prioritization. Yeah. See, as you can see here, impairment is 4 marks. The loss of franchise part, with big paragraph with that I wrote, is 4 marks, and remaining points are maybe corporate governance is hardly 2 marks. So clearly, if you mention a bit more specifically about the financial statement item, intangible assets or impairment of assets, you will get more marks for sure, right? Possible impairment of CGU as a result of loss of franchise, yeah, cash generating unit or whatever, and penalty of loss of franchise. That also provision related to that. To be honest, I merged them all. So you can mention either in my way or you can mention in this way, whatever you feel is comfortable. Okay. And maximum technical marks 12. So 4, 8, 12. I mean, see, if you include just 4 points, whatever I did also is correct only. It's not big thing, but take care. Then risk arising from roller forward. I mean, seriously, guys, this is very easy. This is just like 5 points each. And here you don't necessarily have to write 5 points because it's just asking why it is a significant risk of material misstatement. You just explain long holding, used car inventory, whatever I explained, guys. Seriously, whatever I explained. And then final conclusion should be there. Why exactly is it a significant risk? Right? Or you can start with the introduction only, that it is a significant risk because of the following reasons and because of the fact that they are doing the adjustments like that and they are rolling forward and all of that. Then audit procedures and what we'll do for that review listing. I mean, seriously, they have added extra points. You can take some idea from here. 1 mark for each well-described procedure. So 5 points, 5 marks. Simple, guys. So perform analytical review. You can do that. Methodology for calculating inventory. Sensitive to assess a sustainable valuation for change. Yeah. So if you do that, if you find out some, perform some sensitivity analysis, you can see how much is it likely that valuation will change. If it is highly sensitive, clearly it is likely that the inventory valuation cannot be reliable. Maybe some average figure has to be used or something, which would make the calculation a bit more reliable, and all that. Then inventory counts, attend that and at each location and make note of any obvious damage, and make sure that these are included in the allowances. Review age inventory listing, inventory roll forward from the results of inventory count attendance to be asked here. I want to see, yeah, when repairs are required, for example, initial cost with manager identify controls in place. See, over the initial recorded cost of the vehicles accepted as trade in and the ongoing valuation of used vehicles. See, this is the point that I was mentioning in the trade exchange when they are exchanging the used car for the new vehicle, right? That time you should see what controls have been taken, how have you exactly identified the cost, and what controls are you identifying. So, like, are you checking the market data as well and valuing according to that, or you're just just simply estimating your own figure and probably you're trying to, not a reasonable figure, to be honest, to be short. So that is a thing, guys. And then easy, guys, it's very easy. But you see, this has to be tailored according to the scenario. If you see, you have to mention the name of the company. You have to mention what exactly is a methodology. I am not using generic inventory procedures here. I was very specific to the scenario. I specifically mentioned used cars. I specifically mentioned part exchange vehicles. See, allowance recorded on the associated invoice for the related new. You are checking the associated invoice also to confirm the recorded cost. So if you see, uh, you're confirming used cars, specifically you're mentioning what was the initial cost of the used cars, how did you adjust it against a new car sale, all of that you check the invoice and whether it was reasonable or not, right? To confirm the recorded cost of the used. Because if you confirm from the sale invoice of the car, like in the invoice you might have recorded adjusted against used car given by the customer, so that cost you can confirm from there. See, you should think this much in depth. You should imagine as an auditor what you would do, how you would in real life go and check the invoice and confirm the used car exchanged with us amount for that. So this is what you are supposed to do, guys. Then ethical, 8 marks. Just make mention about this is like they didn't give some divisions. However, I told you it is just that self-review threat explained, other information, implication if listed. Listed also, it's very important you mention about that because see, that's why it's given 2 marks. Because you are remembering from the question scenario that the company is going to be listed. You are well aware of that, and you are well aware of this thing that threat should be zero when the company is listed, at least as minimal as possible. Then safeguards, skills or competence, and conclusion. Conclude, always conclude, guys. So this is not that conclusion though. This is concluding this part. I mean, what do you conclude about the threat there, whether it's an acceptable level or not? Then that's it, guys. And then these professional skills will give you 10 marks that you should remember. So basically, you just have to work for 40 marks. Remaining 10 marks is in the hands of professional skills. The way you have written, the way you are relating figures to the materiality level, the way you are relating to the scenario, the way you are exercising judgment. See, if you think about the threat, you should also think about the impact on the listing, whether the company can further go for listing after that. Then, if you think about some other thing uh, like you should be able to link each scenarios. Then see, for example, you made used car sales. There's increment in used car sales. What is the obsolete inventory? Have you recorded the obsolete inventory for that or not? In the audit procedures, you're considering that. So the more you're aware of each scenario and you correlate each of them, the more you're likely to get the full mark or the maximum mark. And that is what we are concerned with. Okay. So effective application of technical and ethical guidelines, and uh, this is, if you want to read this, you can properly read determination using materiality. Materiality point is here also, here also it can be applied. Uh, and effectiveness and yeah, how clarity is clearly are you gonna, mentioning. That's why I'm saying use simple English so that it sounds most clear. For the scenario to illustrate points or make recommendation. Effective examples from the scenario. For example, what I said about the trade exchange, or not trade exchange, at least for listing, when I'm mentioning in the material misstatement, or not material misstatement here, I'm mentioning about potential listing, and I'm also giving examples from the scenario about the franchise agreement and the loss related to it, and the penalties related to it, and the compliance costs associated to the regulations related to listing. All of this I'm mentioning from the scenario, right? I'm bringing down points and supporting my points in the business risk of potential listing, and why the directors might not include the impairment expense, or sorry, why the directors will purposefully, I mean, leave the directors. It will create losses for the company, in short, and that is a business risk. So I'm bringing down points from the scenario and I'm explaining. So this is an obvious thing, and you will easily get professional marks if you do all this, guys. It's very simple. So signing off now. I think we are very much good to go. I think I have showed you the way you have to write the points. Practice on your own now. If you want, please, guys, encourage me by supporting, by sharing with it with more, by giving me more views. Of course, you can connect with me on Insta, LinkedIn, wherever you want to ask the doubts. And I'm very active in all these platforms. And you can also please fill the comment section, please, guys. Only then I'm encouraged to, make more videos and help you guys further, guys. So please, please, this is a genuine request. Please understand and, uh, you know, help. Just share it with as many as possible. So, bye, guys. Hope you have a good day ahead.